You are watching Market Watch, the brief overview of the key events from the world of finance. A sharp escalation in the Middle East has once again shaken global markets. The U.S. strike on Iran's nuclear sites and President Trump's statements about possible regime change triggered a wave of reactions, from cautious hopes for de-escalation to fears of the Strait of Hormuz being blocked. The latter became the main subject of speculation. Nearly a quarter of the world's oil and a fifth of global LNG pass through this narrow maritime corridor. Despite bold statements and threats, markets are treating the situation as localized rather than the start of a broader conflict. Still, even a small signal from Iran could force a rapid reassessment of current risk levels. Oil prices rose in response. Brent gained 1.4% to reach $78 per barrel, while US WTI rose to $75. Despite geopolitical tensions, prices remained below recent highs. Market participants are betting that OPEC can offset potential supply disruptions. JP Morgan analysts warn that even selective interference by Iran in maritime trade could lead to a significant price spike. Goldman Sachs sees the potential for a short-term jump to $110 per barrel if the Strait of Hormuz is closed for a month. For now, however, markets remain restrained, responding more to potential risks than to actual disruptions. The dollar firmed against major currencies amid rising uncertainty. Gains were particularly notable against the yen and the euro, reflecting the vulnerability of Japan and Europe due to their reliance on energy imports. The dollar index climbed to 99.07, while both the euro and the pound edged lower. Analysts note that markets remain in wait-and-see mode. A potential escalation could drive capital flows into safe haven assets. However, the U.S. Treasury market reaction was muted, yields only inched higher, suggesting investor caution even in the face of mounting geopolitical risk. In the face of global instability, the cryptocurrency market shows mixed signals. Bitcoin briefly dipped below the $100,000 mark before quickly recovering. Despite this temporary weakness, major players remain confident in the long-term resilience of digital assets. Still, some analysts point out that Bitcoin is acting less like a safe haven. 3 failed attempts to break through the $110,000 level and recent corrections triggered by geopolitical shocks are undermining its crisis hedge reputation. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.